Sorry, just getting everything set up here. Sorry to be a couple of minutes late. Good morning, Predicted Trades family. Hope everybody's doing well. We had kind of an eventful day yesterday. So let's review exactly what went down. We talked about in prep yesterday that we were opening near the tops of squeezes. We had economic data that came out yesterday that I said could send us to the bottom of the squeeze. It'd be a great space to start for the upside, but instead it ramped us towards the top of the squeeze. So I did not play any calls. I just let it get up to the top of these squeezes, and then I tried some puts. I used this pre-market high as my trigger. If you see this wick, I had a high around 39.37. So I let price get above that to about that 39.50, and then once we started to give out that 39.37, that was my cue that we could revisit VWAP, bottom of squeeze, daily 21, those kinds of targets. Loaded into some SPY and Q puts, locked some, kept runners. It kept running, so I kept those runners on and let them go. I tried some calls when we were hitting the 21 and the bottom of the squeeze. That worked for a second. You can see this wick up because we were also at the bottom of a little 30-minute squeeze that popped up. So I took a shot at longs at that 21 and that 30-minute squeeze that worked for a second, but then when they started to come back, I cut them and let the puts keep running. And then, I definitely locked up puts early and then re-entered on little bounces, right? So for any folks that maybe did not hold their puts long enough, if you notice these wicks like this, or this one green candle on a 30-minute chart, there were some bounces that allowed you to get into the downside. I know depending on what time frame chart you're looking at, it just felt like it was just constantly going down and no bounces to be had to get in. Sometimes you need to just step out on your charts to a different time frame, like a 15 or a 30-minute, and you'll find an opportunity is actually right in front of you sometimes. So those puts that some of us, got in when I called it out in the morning, and then, that we cut, you just keep watching those puts, or you move to the next strike out to the downside, right? So that you can get in a little cheaper when you see a bounce. So I think we played the 385s on SPY, and I think they were getting in the money here. And when we saw this nice bounce around 12:30, you could have shifted down to the 380s or a couple of strikes further down to get a better entry price and still pick up more if there is more. And just to reiterate from yesterday's prep, the overall thesis was, as long as we can hold the 21, we can see more upside. So I was looking for, a rejection of the squeeze top, settling at the 21, and then go back up to retest our zone. Instead, we gave out the 21. So the thesis yesterday was, if we can hold the 21, we can go higher. If we lose the 21, we had a magnet of the 15 and the 8 right back at our other zone. And since we lost it, straight to that magnet, and then a hair further. So for today, the 15 and the 8 are down on right on top of each other pretty much. And let's see, as we pop, the 8 is starting to push away from the 15, so we're starting to get a crossover. I talked about yesterday when we were opening that 8 was getting close to crossing over the 15, so it could become a magnet whenever they cross. Since we dove, it actually pushed the 8 down. When I first loaded up this morning and we were a little lower, these two are right on top of each other. So as we push higher, that 8 is moving above. So we are getting that crossover. So looking for some retesting of those during the cash session. And looking for a retest of this zone above. Basically 38.50. But we are trapped between some key levels. Get rid of this, because that was just a pre-market trend. And real quick, if we look at a 4-hour, actually I have it over here. If we look at a 4-hour with our handy dandy trend tool, it grabbed these bottoms. We are getting near that trend line if we go to test this 38.07 today. So basically, I'm going to draw in that trend line so we can see it when we move down real quick. That's the wrong tool. There we go. Let's step down to a 30-minute. All right. Wow, the way things line up sometimes, it's just so cool. I'll show you what I mean. POC right now on ES is 37.73. 37.73. If we mark that, boom, it's right down at the other trend line. So, looking for a bounce around 38.07 and a half at this trend line. Psychological 3800, we could slip through for a second and then get back above. Looking for a bounce here to get up to our zone above and these squeeze tops. If this level and trend line give out, I think we will go quickly right down to POC and the next trend line. I think we can hold POC, trend line, and start a journey back up. I mean, overall, one thing that we talked about in prep is when we arrive back to the mean, we can just bounce around these means for a while before we actually make a direction or a move lower or higher. So we got the, oh, we're about to take off, look, and then right back to the means, right? And just because we're below them doesn't mean, okay, now we're going back down. We need to gauge when we are giving out support, and support can be a number of things. This trend line, both of them, you know, the one that we will test first is the sharper wicks, so it can tend to, you know, be a little bit more inclined. The other one I drew from more gradual wicks and closes, so that it is like a more gradual overall trend. We can hold these and get right back up into this zone of liquidity, bouncing around. We can still move higher. Should these trend lines start to give out, then we can talk about, okay, we are probably going to make a directional move away from the means back to the lows, right? And you know, those lows are still, 200 points below us. So there's plenty of room for when shorting will really pay off. I mean, obviously yesterday it did, but just saying, like the last time we were near the mean and we gave out trend lines of support, it was 1, 2, 3, 4 days of selling that took us down hundreds of points. So let's see if today we start to get a recovery pop. If we can get back above this zone and these daily MAs, its target back to the 21. And then we'll bounce around that zone, most likely, between the 21 and the 8, until we depart and head lower or higher, right? So, great gauge. Watch these trend lines, watch these key levels. You can go ahead and mark POC if you want. 37.73. We'll just go ahead and slap one in here. 37.73. Close enough. I can fix the cents later. So, there you have it, folks. Let's see if this key level of support in this trend line can send us up. Looks like we're already starting to get back to those means. We could open up in this zone. We'll see. We do have some economic data coming out today. I will jump over to that. Let me pull that up now. Wednesday, GDP, final domestic demand, gross domestic income, and Mr. Powell is talking at the ECB conference. So we'll see what that 8:30 data gives us, if it pushes us up above the 8 and the 15, if it sends us back down. Overall, when we hit this zone, this 38.43, 38.55, when we hit that, I will likely be looking for some shorts back to test trend line and this level. If we just get through zone and turn it into support, I'll be looking more for longs. If we can get down, if we do reject zone and get down to this 38.07 and are looking good for a bounce, I'll be going long again. You know, I'll be using these inflection points to gauge up and down. NQ. Let me go back to a 30. Because the nice thing is we are opening in a 30-minute squeeze, so that'll help provide some spots to risk off, right? 30-minute squeeze, and it looks like an hourly squeeze are forming. So let's use the squeezes to our advantage and play off of those until we break. You know, play the range until it breaks. So as we run into squeeze tops and these MAs, I might be looking for shorts back down to squeeze bottoms and trend lines. You can see on NQ I kind of already had trend lines ready. it just so happens that the extreme and the less extreme kind of were parallel to each other, which can happen. So, plus 11,500, huge psychological level that was resistance, then became support. And we do have POC at 11,677. So we're already kind of at POC and bouncing off of it pre-market. So for NQ today, play the 30-minute squeeze. If we can get back above the daily 8 and 15 and turn it into support to push higher, we'll be firing these squeezes back up with the goal of getting back to the 21, maybe back to 12,000. Not trying to, be unrealistic, just scenarios. Do I think we're just going to engulf yesterday? It's possible, but I think we do have more economic data coming out in the next 2 days to where we might just get a relief back into these moving averages and go sideways. We can also reject, take out our support, our trend, and mark a change. But all in all, I mean, I know yesterday engulfed Friday's big run up and got us back to where we were Thursday. But as far as like measuring pullbacks, to me, this is not yet a change in trend. This is a measured pullback and profit taking. And they can run it right back up. It will be a change in trend and time to sell again when these trend lines give out. On the ready, if you look around on each of these charts, you'll notice that pre-market high on all of them. I love using that as a signal. Anytime we have a strong push through a pre-market high, we are likely going to come back and test it before going higher. So when we get through that pre-market high, I use that as a get ready. Then when we lose it on the retest for support, that's when I hop in and I say, all right, looks like we're going back down. We usually get at least VWAP. We can get right back down to the bottom of the squeeze. So anyway, on the ready today, we still have the 30 and the 1 hour, but the ready is already starting to get above its 8 and 15. And like I always say, she can start to react first. So like as she's already got above those moving averages, I'm sure as we go back and start looking, they're probably peaking above now. Yep, there goes ES. NQ not quite, but we'll see. So on the ready, just going to use it as a gauge. See if it can stay above its MAs and push off of them and get above 1750. It'll be a good sign on the other indices that we're going to get back above these MAs and, try to make our way back to the 21 or just bounce around in between them. YM. Also back above those MAs. So let's see if we can stay above 31,000, which lines up nicely with these MAs. To push back to the 21, should we give out 31,000? We are likely rejecting the squeeze top and falling back to the bottom. let's see. I'm just going to draw one quick trend line. Because as I look at it, you can see there is some support here, right at the bottom of our squeeze. So, the time to short, folks, is when we give out these trend lines and are going to go take out these Keltners again, moving away from the mean. Right now, the trend is still intact. And as long as we stay above these 30-minute and 1-hour squeeze bottoms today, the trend can continue back up. If we give those out, we know what to do. Apple. Thesis yesterday was, if we stay above squeeze bottom and the 21, we are good to keep trucking up to 144. If we start to give those out and this trend line, right, we'll be going right back to our zone at 138, 138.8. You can see when we got to that 0.8, we tried to settle and pop and then dumped straight through, right? Now we're pulling up on that zone from below. We do have a little 30-minute squeeze that's forming. The top of which is not really showing itself yet, but by the time we get to open, we'll know more. It'll probably be in the middle of this zone. So let's see if Apple can push through 138, turn it into support, take out 138.8. We can get right back up above 140. If this zone is resistance and can't get through 138.8, lose 138, we can head right back down. And yeah, we need to get back above 138.8. Because as you can see, we're kind of getting below that trend line. And let's just see real quick. If I make a slight adjustment. No. I'm not going to worry about it right now. If you guys didn't know, when you're on a chart and you're messing with drawings, if you want to undo something, Control-Z does work, just to let you know. Are you guys seeing my screen okay? PineWeb said I still just see the market watch screen. All right, moving on. I'm going to assume everyone can see my screen okay. So watch this zone on Apple, pretty simple. We need to get above it to move back up. If we keep staying below it, we're going to slip back down 135, most likely. AMD. Whew, AMD definitely gave it out yesterday and right back to lows. Not a huge shocker because we have MU reporting this week. So if market is going to go down a little, they'll take it as an opportunity to get everything back down at lows before MU reports. That will be Thursday after the bell. So for me on AMD, I'm not going to really touch it today. Even if market does recover and head back up to the 21, I think they'll still leave AMD down here. into Thursday. So, gonna leave it alone. Amazon, like everything else, fell back down yesterday and is settling at the first Keltner down. Let's see how this 30-minute squeeze goes, but if it starts to fire down from this first Keltner, Amazon's probably going back to the lows. This 102. If we can hold that Keltner and start to push above 108, we can try to make our way back to this 8 and 15, which will likely be around 110 today. BA carries a lot of weight in the market and has been staying above its daily 21 and 8 in a fight to get back to the daily 50. It broke above the daily 50 yesterday, tapped a daily squeeze top, and then came right back. Still opening above the daily 8, 21, 15, all stacked together. So BA is going to be a great gauge. If it starts to go down and lose these MAs, then we are likely going to be breaking trend lines and heading back down. So as long as BA can stay above these moving averages, even it can come down and test them, but needs to stay above, we can see more upside. If it breaks below, we'll start to see more downside. Cat made it back to the daily 8 and chilled yesterday. Overall not that big of a drop for the market going down like 100 points yesterday. So let's see if Cat can get back above the daily 8, back above 190, 191. Could spell more upside for YM and for the market. But if it keeps rejecting the daily 8 and market rolls over, we could return to these Keltners below. Googly moogly. Had this wedge yesterday on Google. You can see we opened, hit the top, gave out the bottom. Could not hold the 50, settling back at all of our moving averages, 8, 21, 15. Kind of similar to BA in a way, that we were above the 50 and now settling back. Want to see Google stay above this daily 15, get back above this daily 8 and 21, get back above 2250, and start that journey back up. If Google starts to lose 2230, let's just call it, she is probably going to make that trip back down to 2200 for a test. All in all, finance did not really have a horrible day down like tech, like we saw in tech, and holding the 21. So let's see if these squeezes on finance can at least keep it above the 21, above 300 on GS, so she can get back for a full test of the daily 50, which will likely be landing around that 309 today. If finance can stay strong and push, it can definitely help the market get back to the mean. And I believe they report before most tech. Yeah, so. Ooh, and they have an upgrade this morning. BOFA security upgrades Goldman to a buy from neutral with a price target of 380. So, let's see. GS might get a nice pop and get above the 50 on that upgrade from BOFA For our diamond folks, you have access to all GS strikes. JPM. Weaker, but let's see if it can hold the daily 8 and its squeeze bottom and get back to the 21, which it tapped yesterday. But relative strength-wise, finance is looking better than chips. So we should always take note of these things. Finance is looking better than Meta. Rejected that daily 15, right back down near lows. So again, not a big interest in this one for me. It's arrived back at where it was consolidating. But we do have POC above at 169. Interesting enough, so POC is up with the 15. That at least does lend a little more extra, magnet strength that we could recover. But we need the market to do it as well. Microsoft, looking kind of like Google, hit that 50, back down to these moving averages. So want to see it hold and start to push back up above 260. If we get down and lose 255, we can likely roll back to 250. Netflix. Oh, could not make it to the daily 50 or to this high from Monday morning. Back down she goes. Let's see if it can get back above the 8 and the 15. Back to 185 to get to 190 and 200 above. If it starts to give out 178, kind of these lows or spot that we bounced, 176, 178, we are rolling back 170, 166. Vidi, much like AMD, probably just going to give Vidi a break until after MU reports. Right? It gave out, already down at first Keltner, and back where we bounced last week, and in this range where we consolidated last week. So they'll probably leave it in this range. QQQ. Well, QQQ has given out its trend line, even though NQ is still above. Which, these things can happen, obviously. So let's see. Let me just take a quick check. Ooh, yeah, I remember this zone that I drew. Should have known it would come back and play. So, let's get back down to a 30-minute. So I marked this zone last week during Thursday morning prep. I said, hey guys, let's just watch this zone, and if it can hold, QQQ can take off and get a full reversion to the mean. So we got all that. We get our profit taking back through the MAs and this trend line. Now we have arrived back at that zone that we held, and then took off and never came back. Well, now we're back. So that will be a great gauge for QQQ today. Squeeze bottoms are aligning there. So pretty easy. If we can hold this zone on QQQ, we can resume going up. If we lose this zone on QQQ today, then ES is likely losing its trend lines. The market is likely going to start really rolling over and continuing this downtrend that started yesterday. So let's see if this can hold us, send us back up above the 8 and the 15, back up above trend line to the 21. Those are the targets today, at least, for recovery. Roku. Roku started dumping on Monday, back below 100. Yesterday was just a slight continuation of that. And we're back at all these stack moving averages, right? So if Roku just kind of stays in this 88 to 92 range, would not be surprised. Sitting at liquidity, figuring out the next move. When do they report? The 28th. When does Netflix report? The 19th. So who knows? Netflix and Roku could start to see some love next week and the one after, leading up into Netflix reporting earnings on the 18th. But for Roku, we can hold these moving averages, get back above 92. She might actually make a run back to 100. If we start to give out 88, she's likely going to roll over 82. Shop. Oh, shop. You $30 stock, you. Gonna let this one settle. Not gonna be playing it today. Or this week, probably. I'll check in on it next week to see what the options look like, but right after a split, I'm just leaving it alone. Snowball. Relative strength, guys. She departed the 21, got back to the 50. Yesterday just slipped below the 50 in the first Keltner. Let's see, as long as she can stay above 140, she can get right back to 150. If she starts to lose 140, going down to the daily 8, which looks like it'll be kind of coming in where this last low bounce was, midday. So yeah, if she gives out 140, likely coming back to the 8 and the 21 at 35. SPX. So, talked about this yesterday, stuck between some gaps. Since we filled this gap, I don't need to send it forward, but you can see we fell to it, tried to bounce out, and then completely went through that gap again to arrive back at this one. So that's why we leave those gap fills around. With our gap down 38. Stop that. 38, 32. Oh, okay, we're having a slight gap up now. So, SPX pretty simple. If we can hold the top of this gap or the daily 8 and push off of it, it's a goal to get back to the daily 21 at 38.92. If we can't get above the daily 8 and start to push off of it and get above 38.50 and push off of that, then we can come back and fill this gap to get to that psychological 3800. Spider. Got through gap fill and the mean, tried to bounce at it, then back down. I did leave this one on just because it, we filled the gap. It needs to become support to take off. We tore back through it, back to the daily 8. So let's see if SPY can get back above that daily 8 and 15, likely stepping down to about where we are on the 8. Don't start freezing on me. I'm almost done. Come on, Tess. Come on, Tess. What are you doing? There we go. So just like everything on the Qs, let's see if we can get back above the 8 and push off of it. If we stay below it, we can roll back to this 374 key level. Thursday's bounce that got us going, right? Much like on QQQ. Tesla. Key levels, guys. Tesla. Last Thursday it held 690, works up to 744. Yesterday it rejects 744, and here we are at 690. That's why we mark these key level, folks. We never quite know what's going to happen, but we can be prepared that when we see a strong hold of something, we can go long. When we see continued rejections of something, we can go short. So let's see if this 690, 695 zone that we're about to open in can send us up like it has in the past. Right back above 700, back to the daily 21, 718, 744. If we lose this zone, and 681, right back to 657.54. So let's see how this little range that we're in on Tesla goes. And VIX. Yesterday on VIX, we talked about if we need to stay below 27 and head lower for the market to see upside. We quickly got above 27. We even had a pullback to turn it into support, and so it went from 27 straight up to our moving averages, daily moving averages. So for upside today, we need to give out these daily moving averages and push back to 27. That will give us a recovery day. If we do not get that, if we stay above 28 and get back above 28.8 and move through these moving averages, then we're going to see more downside on the market as VIX moves to 30 again. But we got below our moving averages. We came back to test. So we can continue to be bullish as long as VIX rejects all of these and starts to go down and take out 28 in a bid to get back to 27 and head lower. So that's pretty much it for prep. Hopefully this is helpful for everybody. Oh yeah, you'll notice I made a little tweak to the Beast tool when you throw it on options. You will now see that the trail line is much thicker, and I added a little cloud to this trail line. The point of that is to help folks with holding longer and with re-entry. I talked about this Apple put yesterday. If we go back for a second and look at Apple and the thesis I laid out yesterday. You know, it was mission take out yesterday's high, Monday's high, in a bid to get back to 144. We rejected Monday's high and fell back on Apple. What the heck, where am I? There's all the squeezes. So, if you picked up puts at the top of the squeeze cloud with the thesis of getting back to 138, because that was the key level, if we can't get going, that we'll fall back to. When we go look at this 138 put, it opened and slipped right to Burger Bottom and Beast, and you could have picked it up for about 45 cents. It takes off, gets above that trail, and then that trail carries it and pushes it up all day from 45 cents to 224. And as you can see, whenever it comes into this cloud for a test, as long as it holds, that's an entry point. So if you missed that 45 entry, you still could have got an 86 entry when it slips into the green cloud. You're basically risking against the trail. So you get in for 86, you call it 90 cents. You're risking down to, about 80 cents. So it's like a 10-cent risk for more. And from that point, coming out of that cloud at about 90 cents, it almost ran straight to 180 before coming back to the cloud. About 170. Back to the cloud. 170, cloud, yada yada. So, little tweak to the tool to help folks with holding longer and with finding those re-entry points if you already got out. As you can see, I also, this isn't included in the tool, but I just threw a bot on that I built to give you an idea of what that looks like. You buy in here where you should, and even if you lock everything up here, you can get back in and still catch pieces, right? Even from this 140 entry, almost a whole buck, right? Ultimately, our outer shaded zone is the target once we get out of burgers. So, even if you lock everything up here, you can re-enter with the simple rule. As long as it stays above the trail, this is a re-entry point. If it takes out the trail, then it's not. So it's a small risk for more reward. So check that out today on your options charts. Hopefully it's helpful for everybody. Would love to get some feedback just to let me know that you're liking